Stamp duty land tax, more commonly known as stamp duty or SDLT, is a tax that is due to HMRC on the purchase of a property. Many people will be familiar with the way that stamp duty applies to freehold purchases, but shared ownership purchases are covered by slightly different rules. The rules relating to stamp duty on shared ownership transactions change from time to time, so when the time comes for you to complete your purchase, you will need to discuss with your solicitor the rules in place at the time and applicable to the particular features of your transaction. The stamp duty rules vary depending on whether the transaction involves a resale or the grant of a new lease. Generally, the grant of a new lease will apply to new build transactions, but sometimes you may be purchasing a share in an older property being sold as a shared ownership transaction for the first time, so the grant of a new lease can be involved on non-new build properties. Where a new lease is to be granted to you, rather than an existing lease granted to a previous owner being transferred to you, you will be assessed for stamp duty liability on the purchase price, also called the premium, and on the rent payable under the terms of the lease. If the purchase price is below $125,000, then you will not be required to pay any duty on the amount payable for your share, although your solicitor will still need to make a stamp duty return following completion. If the purchase price is between £125,000 and £250,000, you will pay duty at the rate of 1%. For example, on a purchase price of £150,000, you would pay duty of £1,500. In addition to the duty payable on the premium, there can be further duty payable in respect of the rental element of the lease. If, for example, you are purchasing a 25% share of a property, you will need to pay rent on the 75% retained by the housing association. Stamp duty will usually become due on the rental element if you are purchasing a relatively low share or if the rent is quite high. Duty on the rental element can be payable even if duty is not due on the purchase price. This is something to watch out for when requesting a quotation from a solicitor, as you will want to try and get as much information about your stamp duty liability at the outset so that you can budget accordingly. Unlike the banded system in place in relation to the purchase price, where you know, for example, that duty is payable at the 1% rate for purchases between £125,000 and £250,000, there is not the same quick and simple rule in relation to the rental agreement. The amount of duty can only be confirmed once completion has taken place and the exact dates of the lease term are known. Your solicitor should, however, be able to give you an estimate of the duty payable by assuming one of the most common lease terms of 125 or 99 years, and then using a calculator provided online by HMRC to assess the likely amount of duty. If you are purchasing a resale property, then you would pay duty on the purchase price, if over £125,000, as you would on any other property purchase. However, the duty payable on the rental element of the lease does not apply. Instead, your solicitor will need to make investigations to identify the amount of duty that was paid by the seller when they were granted the lease to be able to advise you on your future position. The reason for making investigations as to duty paid when the lease was granted relates to the potential for a future stamp duty liability which may arise should you go on to purchase more than 80% of the property. The current rules adopted by HMRC state that stamp duty is again assessed on shared ownership properties when you staircase above 80%. The first tenant under the lease has an option to make what is known as a full market value election. This means that the buyer can choose to pay stamp duty on the full value of the property, rather than just the purchase price for their share on the grant of the lease. This will mean that more duty is payable at the outset, but this then eliminates the potential for future duty when purchasing shares taking you above 80% ownership. If you are the first tenant under the lease, you will be given this option, and if you are purchasing a resale property, your solicitor will investigate whether the original tenant took that option, meaning that there will be no further duty payable by you should you later staircase to 80% ownership. You will see that the stamp duty rules surrounding shared ownership are complicated, and therefore it is important that you seek advice from a solicitor with experience in the area, so that you can be sure you are fully advised on your potential stamp duty liability from day one to enable you to budget.